Hello, my fellow investors, and welcome back to another fundamental as well as earnings analysis video. Today, guys, I want to cover a company that had earnings on Tuesday. I know I'm a little bit late on this, but I would like to cover the earnings for NU, because this is a company that I believe I've only done here one time on the channel, and well, I would like to see if I've learned a lot based off of the fact that it's been like a year and a half since I've done this company. So really, I'm curious to see how much my my analysis on this company has changed, as well as the fact that because it has been some time now, we might get some numbers that before we didn't have. So we might be able to make a pretty good analysis when it comes to this one on the 5-year perspective. So before we get started, make sure to like, subscribe, comment. It really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X. And of course, if you guys would like to join us on our Discord, make sure to ask for the link in the comment section below, because it keeps expiring. I don't know how to make it not expire. So yeah. So with that said, guys, let's get started with this analysis. So here we got the company New Bank IR. Now, for all of those of you who may not know what this company is, let's take a quick look at their company profile. So this is a really interesting company because it looks like they have a lot of prospects ahead of them. New Holdings Ltd provides digital banking platform in Brazil, Mexico, Colombia, Cayman Islands, Germany, Argentina, the United States, and Uruguay. It offers spending solutions comprising new credit and prepaid card, a digital enabled card that acts as a credit card and a prepaid card. Ultraviolet credit and prepaid card, a premium metal credit card for affluent customers, mobile payment solutions for new account, and that's new as in NU account customers to make, I like to play on words on that one actually, I just caught it, to make and receive transfers, pay bills, and make everyday purchases through their mobile phones. So yeah, they're essentially a diversified bank. I see them very, very similar to that of like Discover in a way. Still though, it's a very, very interesting company. And look at this, guys, they're also based in Brazil as well. So this is actually a foreign company, which is very, very rare for me to do. So let's jump into their earnings, guys. Now, I'm not going to go over their whole entire earnings, earnings report. I will link it in the description below for you guys to read for yourselves. But let's take a quick look at this. So we got New Holdings adjusted net income of 442.7 million, revenue of 2.7 billion, guys. This is up. This is an insane number. So this beats by 170 million. However, the big number here is how much this is up by year over year, 66.7%, absolute insanity. Net income for Q1 2024 of $378.8 million, which is actually in the positive, which is really, really good to see because, oh boy, they've been in the negatives when it comes to the net income for quite some time. And an annualized ROE of 23% compared to 141.8 million profit in Q1 of 2023. Gross profit, News gross profit reached another quarterly record high of 1.18 billion or 76% increase year over year. Absolutely crazy. Gross profit margin stood at 43.2 from the 40.2 in Q1 of 2023. Capital. News strengthened its position as one of the best capitalized players in the region. Its capital adequacy ratios, CARs, have very comfortable margins above regulatory minimums in the countries in which it operates, even without considering the 2.4 billion in excess cash held by New Holdings. Liquidity, and this is the last point. On March 31st, 2024, New had an interest earning portfolio, IEP, of $9.7 billion, which rose 86% year over year. Wow. To the ramp up of the personal loans and credit card receivables in the past 12 months. Total deposits increased 24.3 billion, while a sustained low cost total deposit underscored News' progress in leveraging the local currency's retail deposits, franchise, and in Brazil and Mexico. News loans to deposit ratio reached 40% versus 34% in the previous quarter. So everything is moving in the right direction when it comes to them, guys, which is really, really good to see. However, understand that this is a very, very new company. In fact, if we take a look at the calculator very quickly, we can see that, well, actually, it's a new company, but man, that market cap is actually very big. Ticker of NU, market cap of $112.3 billion. PE, guys, that PE is insane. 46.47. Here's the thing though. PE only tells you the ratio, right? Well, I guess not. It's the ratio between the price and the earnings. It's a good metric when it comes to, I guess, a quick view, whether or not to see if the company's overpriced. However, I like this kind of free cash flow best. and that's what we're going to use here. So based off of this is looking extremely high. However, discounted free cash flow actually says something a little bit different. We'll take a look at that in just 1 minute. When it comes to the share price, this is at $12.09. And if we take a look at this company, how it's moved, this is insane. 98.52% on the 1 year up. That's crazy. And on the year to date, 45.14%. As of today, granted everything today. By the way, I'm recording this on the 15th of May. And yeah, so right after the CPI came out, and it's not really surprising that everything is up because markets just ignore everything when it comes to CPI. Regardless though, today this was up 4.68%, after market 0.17% up. You can see that on the 52-week range, $5.80 to $12.50. And on top of that, if we take a look at the financials very, very quickly, you know, this only goes back to 2018. This is why I'm saying that this is a fairly new company, because they IPO'd essentially in 2018, maybe even a little bit earlier, but you know, it's only been about a few years, right? Yeah. 2021 actually, as of this graph, it shows December 9th, 2021, but we have numbers going all the way back to 2018. Regardless though, very, very new company, to say the least. Now, they don't pay out a dividend, which means all of the cash flow is going straight into themselves, and this cash flow increase is insane. $58.36 million in the average for the past 5 years. As of last year, there's $1.25 billion. Guys, that's crazy. That's absolutely crazy. I love to see that. So far, the only thing wrong with this company that I'm looking at is the PE. But again, that really doesn't tell us much of anything. Let's move now into the overall fundamentals to see what in the world we could learn and see if maybe there's a pattern in some of these. So starting off, we got the net income. This one isn't looking too hot, I gotta say. They recently just became net income positive, so it's I have no idea where this is gonna go. However, this is went from 5 years ago of negative $92.5 million to 1 year ago of $1 billion, increase of 1,214%. As I said, I have no idea where this is going. Therefore, I'm going to put this as a 50%. I have no idea where this is going. We only have 1 year positive numbers. Technically 2, because right now they're still in the Q1. They are in the positive, but I need to see the whole entire year. Now, what doesn't have this problem is actually the free cash flow. The free cash flow, aside from one outlier year, it's looking actually really good. So we got 5 years ago of $274 million to 1 year ago of $1.25 billion, increase of 355%, with an average of $58.36 million. Guys, aside from this 3 year ago thing that happened here, I don't see this as a bad thing. They recovered nicely the following year, not entirely to match up that of 4 years ago, but they're still above positive, which is great to see. So overall, I'm going to give this free cash flow a 75%. It's a passing grade in my book. And the revenue also doesn't look too shabby. You got $327.2 million 5 years ago to 1 year ago of $3.71 billion. This is an increase of 1,032%. I forgot to put a grade for this, but I'll show you guys right now. I'm going to put this, guys, as an 80%. It's actually not too bad. The one thing I would say is that I don't like the spike from 2 to 1 year ago, but now everything we've been seeing a spike as of 1 year ago. So I'm going to give this an 80%, give it the benefit of the doubt. The assets and liabilities looks really good too. You guys could see that, yeah, there was a spike from 4 to 3 years ago, but all in all, I like it, right? From 3 to today, it is pretty consistently increasing. A little bit of an outlier here from 2 to 1 year ago, or a jump, not an outlier, a jump. But all in all, it's looking really solid. Average total assets of $29.4 billion, liabilities of $25 billion. There's a difference of $4.6 billion in the positive. I gave this a 75. I'm going to increase it actually to an 85. Now that I'm looking at it again, I really do like this graph. Now, when looking at the cash flow minus the liabilities, this is where, it's exactly what you would expect. I mean, this is consistently going down, guys. As of 1 year ago, it is negative $35.7 billion. As of, the average, it is negative $18.6 billion. I'm going to give this a 40. I feel like this is, even though this is not what you want to see, it's expected, right? And it's kind of expected, right? It's like, if you weren't seeing this, then it'll be a red flag. But I see this as a fact that they're taking on, liabilities, but they're just taking liabilities, I guess, to grow the to grow the business to begin with, right? To grow the business so that way they get more people, that kind of stuff, like more customers, I mean. So even though this isn't looking too good, I understand it. That's why I'm going to give it the benefit of the doubt as well, 40%. Now the shares outstanding, this is where it's difficult because, well, they IPO'd, at least by the graph, they IPO'd in 2021, and you see this massive jump in shares going from 1.34 billion shares 4 years ago, and 5 years ago it was even less. It was 1.14, but it goes from 1.34 billion shares, guys, to 4.61 billion. And then after that, they continue to increase it at a rate of 0.16. So even though this is an increase of 319.5%, I understand why they're doing this. I understand why this occurred. Obviously, the IPO and that kind of stuff. I fully understand that. And, they're going to probably continue to issue shares at a pretty consistent rate at around like 0.2 or something like that. I still don't like it, so I'm going to give it 20%, unfortunately. And lastly, when it comes into the cash and equivalents, they currently hold $6 billion with an average of $3.74 billion. So this is a tread with caution kind of company, 60%. So yeah, it's because it's new, right? It's because it's new. I got to say though, aside from their net income, which honestly, their net income could be really solid in the next few years, right? If they continue on this trend. Aside from, guys, their net income, their profit metrics are pretty good, right? Are very good, I would say. So just based off of that, this is looking good. The only thing that sucks is the shares are standing, but I expect that to continue to go up, as well as the cash flow also continue that. The cash flow minus the liabilities also continue that to go down. But honestly, when it comes to the profit metrics, free cash flow is looking decent. And revenue is also looking really good. So with a net income of 50, you could say that this could be higher, but 60% is my final grade when it comes to this company. So now let's take a look at the discounted free cash flow. And I got to say, guys, right off the bat, not adjusting for debt, we got $1.84, and adjusting for debt, $5. Here's the thing. You're going to see these numbers change drastically once I put in those revenues assumptions as well as the projected shares. So okay, they've been issuing, 300 something percent in the past 5 years. IPO, not really going to count it. However, I think that they're going to do a lot. I really do think so. So for the lowest assumption, let's say negative 15%. The negative just means that they're issuing. And let's go to negative 13. And then let's go up by 2 again. Yeah, let's go up by 2 again, which would be negative 11%. Again, they're issuing shares. Now the revenue. Here's the thing, right? Seeking Alpha has this thing at 43.5%. The sector median is 5.2. I actually kind of do believe this 43.5%. So let's go with that, right? Let's go with that. So for the highest assumption, let's go with 45. I'm gonna swing it up significantly higher. For the median, let's go with let's go down by 2, right? So let's go down to 43, and then let's go down to 41. Let's go down by 2 again. Guys, look at these numbers. Look at these numbers. These numbers look crazy. $5.67, not adjusting for debt, to $6.55. Wow. Yeah, it looks bad. However, when you adjust for debt, $12.43 to $14.23. Interesting, right? Margin of safety of 5, 10, and 15, $10.56 to $13.52. Guys, with the current share price of $12.09, we are essentially at the median assumption with the 10% margin of safety, which is actually kind of interesting. So by the looks of this, guys, the discounted free cash flow is telling that this is a pretty good buy right now, assuming that you believe that in the next 5 years, they might do this, right? They may issue shares at negative 13% total, right? Total 13% in the next 5 years total. And they'll do 43% in the next 5 years total. So yeah, that's not looking too shabby. Now, I don't remember what I said for the first time I ever did this video or I did this company. Maybe you guys can go back and rewatch it. See what I did different, see, like what my thought process is now after doing hundreds of companies now at this point. So yeah, by the looks of it, guys, it's looking like a good company to buy at this point, and their fundamentals aren't looking too bad either. It's just mainly a proceed with caution kind of thing, especially them being in the financial sector. A little bit of caution there, but honestly, unless there's like some gunk in there, me personally, I would not mind buying into this company for myself. Not telling you guys what to do, not financial advice, obviously. I'm just saying that for me, it's not looking like a bad deal right now. So all in all, that pretty much does it for the company new. I gotta say, I don't think I liked this company at first, like when I first did it like a year and a half ago or something like that. After looking at these fundamentals again, I gotta say that they're actually not that bad. They're actually not that bad also. Tell me what you guys think about this company. Do you own it? Do you want to buy it? Do you want to do more research on it? Yeah, and tell us in the comment section below. Make sure to like, subscribe, comment. Really does help with the algorithm on YouTube as well as Rumble. Make sure to, of course, follow us on X. And if you would like to join the Discord, ask for the code or for the link, and then I'll send it over to you guys. All right. So thank you so much for watching. Peace out, and we will see you all next time.